How's it going, guys? Welcome to a brand new video. In this video I'll be going about forex trading for beginners. I want to make this video a very in-depth video on forex trading for beginners, and I hope you guys enjoy. So let's get straight into this video. So forex trading, also known as foreign exchange trading, is the buying and selling of currencies on the global market. It is one of the most popular forms of trading, with an average daily trading volume of over $5 trillion. Guys, that is a lot of money. Like $5 trillion traded every single day is a lot of cash. It is like forex trading is the biggest market in the entire world. Like no market beats this. This is the biggest market in the entire world, traded with a volume of $5 trillion. Guys, that's a lot of money. If you can have a small fraction of that, it's life-changing, honestly. So in this video, we'll be discussing the basics of forex trading for beginners. Let's get straight into the video. So, alright guys, so real quick, everything I mentioned in this video, all the links is in the description of this video. And guys, if you're enjoying this video, please make sure to drop a like and subscribe. And ask me any question you want to ask me in the comment section, or you can DM me on Instagram, and let's get straight. The forex market is decentralized, meaning that it's not based in any one location, unlike stock exchange. Instead, it is a global network of banks, financial institutions, and individual traders who buy and sell currencies. The market is open 24 hours a day, 5 days a week, with the exceptions of weekends. So the market is usually closed on Saturdays and Sundays, and usually on Sunday evening around 10 or 11 p.m. it opens up. So that's how the forex market hours work. When you trade in the forex market, you are essentially buying one currency and selling another. So let's say if you buy the euro and sell the US dollars, you are betting that the value of euro will go up, relatively up, like it will increase relative to the US dollar. So if your prediction is correct, you can make a profit. If not, you will incur a loss. So let's say you took a trade on euro USD, that you want to buy euro USD, as euro against US dollars, and this clearly means that you are actually buying euros and selling USD. So let's say for that time period where that you took that trade, if euro is to go up and dollars is to fall, then you definitely gonna make some money. But if the reverse is the case, then obviously you would be in a loss, like you would incur a loss. So trading is very simple. That's just the logic. It's no fancy. It's not a fancy, tricky something. So it's very easy, straight to the point. There's only two buttons on the screen for us as traders. There's only a buying button, and there's always a selling button. So these are the only two things you can do when trading forex. You can either buy or sell. And if your prediction is euro will go up against dollars, then you want to buy euro by placing a buy. So when you place a buy, automatically it's telling the broker or the machine that, okay, I want to buy euro and sell dollars. I hope you understand what I'm saying. I hope so. So just watch this video again and try to understand what I'm saying. Okay, so guys, let me mention something real quick. So when you see a pair like euro USD, the first currency, the first currency is euro against USD. So the euro is the base currency, the main currency, while the USD is the quote currency, which is just the sub currency. So that's why I said that when you buy euro against USD, you are buying the base currency. That means you're buying euro and selling USD. All right, so let's get straight into the next point. So when you trade in the forex markets, you are essentially buying and selling. All right, so we already say that. So one of the key concepts in forex trading is the exchange rate. The exchange rate is the value of one currency relative to another. So for example, the exchange rate for euro USD might be 1.20, which means that 1 euro is worth $1.20, 20 USD. So the exchange rate can fluctuate based on a variety of factors, such as interest rates, news, economic growth, employment rates, political events. Many things can influence. Even traders' sentiments can sometimes can affect the the fluctuation of price. So many things affect price, news, CPI, interest rates, political events, economic growth, and a host of other things that influence the market. That is why when I trade, I sometimes like to look at some news website, so I'll be sure that, okay, if there's an high impact news, I might just want to stay out, or maybe want to ride the high impact news. I know I'm going off points now, but this thing I'm saying now is going to come in handy when you become a good trader, like when you start trading, because as a trader you need to understand some aspect of fundamental, which is news, interest rate, political events, economical events, and all this good stuff. Because if you are caught at the wrong time in the market by some high volatile news, you might get screwed, honestly. So take note of that. This is a point that I'm not supposed to mention in this video because it's a beginner's course video, but somehow it's gonna come in handy, and I understand if you don't understand what I'm saying. All right. So another important concept in forex trading is leverage, guys. Leverage can make or break your account. It can literally elevate you or destroy you if used wrongly. So leverage is the ability to trade a larger position than the amount of money in your account. So let's say, for example, if you have $1,000 in your account and you use leverage of 100 to 1, you can trade a position worth $100,000. I know this is a little bit confusing, so let me explain. So let's say you have an account of $1,000, and because on the normally you can't trade forex with small amount of money. Like you need to have a little bit of leverage, even if it's 1 to 10, except you have like maybe $1 million in your trading account. But for retail traders that have little capital, it's you must have to use leverage. It's a no-brainer, because your small $10, your small $5, your small $1,000 cannot move the market. At least I'll say you need at least $100,000 to at least get a chance to move, like to take trades in the market. So that's why most people like to use leverage. I personally have an account that has a leverage of 1 to 500, and I have another account that has a leverage of 1 to 1,000. Yeah, and that's because I'm a little bit experienced. I'm experienced in trading, and I can manage my trades and not get crazy with it. So when I take a trade, when I have an account of $1,000 and I have a leverage of 100, this clearly means that I can take a trade. I can open a trade of $100,000. That doesn't mean that I can make $100,000, but it means that I can potentially make $100,000 in the long run. It gives me the opportunity to enter a position size that a $100,000 account can enter. But with your normal $1,000, unfortunately, I'm sorry, you can't take such trades. So like I said, if you have $1,000 in your trading in your accounts and you use a leverage of 100 to 1, you can trade a position worth $100,000. Leverage can be both a blessing and a curse, like I said, if not used correctly. It can help you make big profits, but it can also lead to big losses if you are not careful. Alright, so guys, so when you trade in the forex market, you need to use a trading platform. So guys, this is when the trading platform aspect of things comes in. So I have multiple trading platforms I use, and I wouldn't want to mention any platform now because I could end up changing them in the future, who knows. So every link to the platform or the brokers and all that I recommend are in the description of this video. So there are types of platform now these days. There's the normal broker where you put in your live funds and your own personal money and start trading with, and there are trading platforms now where it's called prop firm, like a proprietary firm that funds traders, good traders actually, capital. So to me, I've been using a proprietary firm for the past 1 year now, and I don't have a personal live account at the moment, and that's for good reasons. So I have a personal account, but it's just a small account of maybe $200, which is I don't even count as an account. So When you trade the forex market, you will need to use a trading platform. A trading platform is a software program that connects you to the market and allows you to buy and sell currencies. So the prop firm allows me to buy and sell currency, and they fund you a bigger account. Like you use, like let's say you can use $100 to sign in for a $10,000 account, and if you pass the challenge that they give to you, you will be funded with $10,000. So to me, I see that as a good deal, because if you can trade, why not just go and trade a bigger capital instead of me funding that $100 in my personal account and using it to trade. How much can I even possibly make from $100 account? But now you can scale it up to like a $10,000 account and trade using that account. Not to say like live account isn't that good, if you can't stick to the plan and all those rigorous rules that they give you, then I wouldn't suggest you do it. Get good at trading before you sign up for those brokers. There is a lot of brokers that they're African-based brokers that don't accept people in the United States and Canada and United Kingdom, but there are brokers that accept everyone, every country worldwide. And so I'll be leaving links to if you're in the US, Canada, United Kingdom, I'll be leaving a broker that suits you guys. If you're in any part of this world, then I'll be leaving a broker that is accessible to everyone. And yeah, so that is it. And I'll be leaving the link to my best prop firm I love to use every time I trade. So I'll be leaving the link to everything in the description of this video, guys. So alright guys, so there's this thing called TradingView. I don't know if you guys know it, but I believe you guys know it. A lot of traders know it. Even the newbies, beginner traders, they all know this platform called TradingView. This is by far, hands down, my most preferred, like my most favorite trading platform I use to analyze my trade. Guys, take note, analyze my trade. I do not place my trade on TradingView. I do not. So I only use TradingView to analyze my trades and find my entries, my setups, my stop loss, my take profit, and all those beautiful good stuff. So I'll be showing you guys how I use TradingView to get my entry, my stop loss, my take profit, and how to use those information you got on TradingView to place a trade on MetaTrader 5 or 4. It works the same way. So I'll be showing you guys that in this video. So guys, stay tuned, watch to the end so you don't miss out on all this stuff, because I got a lot of students asking me that how do they use TradingView and use those information they got on TradingView to place their trades on MetaTrader 5. So this video is going to be an all in-depth video. I will show you guys how to do that. So now that you have a basic understanding of the forex market, let's talk about how you can start trading. First, you will need to open a trading account with a broker. Like I said, a broker is what you need to open an account with a broker, and a broker is a company that acts as an intermediary between you and the market. Once you have a trading account, you can deposit money and start trading. So the broker is where you put in your money. Like when you put in your money, then you can link the broker to your MT5 and start trading. So when you place a trade, all the broker does is send your request, your order to the pool of liquidity or whatever it's called, and fill you in, and you can either make money or lose. So when you make money or you lose, the broker is the one that pays you out or takes your money. All right, so when you're ready to start trading, it is important to have a strategy. So I will be giving you guys a strategy. Guys, this video I'll be dropping a playlist of my best strategies that I have made on this channel. I have a lot of videos on this channel, but I'll be giving you guys my main best strategies all in the playlist below this video. So if you want to know, just click the link, the playlist link in the description, and you will see I think around 10 plus videos. I have a lot of videos on this channel, but this is gonna be my favorite videos on trading strategies that's best suited for beginners, and it's really profitable, honestly. So a trading strategy is a set of rules that guides your decision making. There are many different trading strategies to choose from, such as technical analysis, fundamental analysis, and scalping. So guys, everyone as a fan of this channel should know that I'm obviously a big fan of scalping. I scalp a lot, because I trade on the 1 minute, 3 minute, and the 5 minute time frame. So when I'm taking my trades, I'm usually looking to get in quickly and get out real quick. And that changed because I started doing this prop firms, and you get like 30 days to trade, and if you don't make money, or if you're in a little bit of a drawdown, you could just lose your account. So except you make some profit, then you can have a free retry. Everything I'm saying is going to add up very soon when you start trading. So I was trading the 15-minute time frame, which is kind of like a day trading kind of thing. So when you're trading like the 1 hour, 4 hour time frame, that's considered swing trading. Yeah, swing trading. So when you're trading like the 1 minute, 3 minutes, 5 minute time frame, then that's considered like scalping, which is really interesting. But fundamental trading is like when you're trading just news, economic events, CPI, interest rates, political events, and all those good stuff. High impact news, CPI, Brexit. So when you're trading, news and all that, it's called fundamental analysis, fundamental trading. Technical analysis is like price action, candlesticks, engulfing, Maribuzo, shooting stars, and all this beautiful stuff. So guys, that's just it for technical analysis, fundamental trading, and scalping. Alright guys, so before you start trading, it is also important to practice risk management. You can have the best strategy, the best psychology, but if you don't have a proper risk management, you can kiss your account, your Forex career goodbye. Because your risk management is like your life percentage, like your life bar in trading. I've seen a lot of people come into the Forex market, trade for like 1 week. How annoying is that? Trade for like 1 week and say Forex is a scam. Trade for like a month and say Forex is a scam. And I'm like, you've just been trading for a whole week, a whole month. I've been trading for the past 4 years. I've been losing for the past 2.5 years or so. And I just recently became profitable for like a year and some few months now. And it's been life changing, honestly. So risk management is everything you need as a trader. Personally, I take a risk of 3% maximum on every single trade I take. I don't like to take, anything above 3% is considered to me high risk. Normally, like my normal risk size is usually at 2% risk on every trade I take. But I wouldn't want to over leverage and you start using 10%, 5%, 20%. I've seen some people using as much as 50%. Oh my god, like of the accounts on one single trade, which is just stupid. Like it's just insane. How will you be using 40%, 50% of your account? All it takes is one losing trade and you're down 50%. And I assure you, if you're down 50%, your psychology is gonna be messed up, and the chances of you blowing that account is as good as 101%. You're definitely going to blow the account if you're down 50%. So I don't like myself to be down. Like I don't personally like to be down like 20%, because if I'm down 20%, it has a lot of psychological effects on me. So trade management, some of my students have, I taught my students, okay, you can have a fixed take profit, and you must not take a trade without a stop loss. Oh my god, jeez. Guys, it's scary to me, like when someone tell me that I took a trade and I'm like, where is your stop loss? And they say, I don't have a stop loss. Like when I hear such statements, my heart beats. Like I'm even scared on their behalf. That's crazy, man. You should never take a trade without having a stop loss. You should never take a trade without knowing where your stop loss is going to be, without knowing where your exit point is going to be. If I'm wrong, I want to get out at this level. If I'm wrong, I want to lose 1%. If I'm wrong, I want to lose 2%. If I'm wrong, I want to lose so amount of percent. You should be sure of where you want to get out before you even place that trade. It's very, very important, guys. Very, very important. So psychology, guys, please do not take, stick to the plan. Have a like a in-depth rule that you stick to. I would suggest have two strategies. I have two strategies I use, because so most times if you have one strategy, it doesn't show up all the time. So two to me is like a balance, like yin yang. To me it's a balance. So two strategies is I would recommend. One is okay, two is perfect, but please do not go above two. Three is too much, guys. Three is too much. And I would say when you take a trade, maximum loss for the day is 2. when you take 2 losses in a day, please work out. Please work out. I would even suggest to most of my students, one trade workout. Risk management is the process of identifying, assessing, and mitigating the risk of your trading activities. This includes setting stop loss, taking profits, and using proper position sizing. So like I said, I want to show you guys how to use this TradingView to get your stop loss, your entry, and how to also use those data, those information on TradingView to take your trade on MetaTrader 5, which is what I use the most. I love MT5. That's not to say MT4 isn't good. MT4 is good, but I prefer to use MT5. So let's get straight. So as you can see, this is my TradingView account, and let's say I want to take a buy at this point here. Let's say I want to take a buy here. Then your stop loss maybe down below this wick. So you see how I found my trade, and the first thing I went for was my stop loss. Like when I spot an entry, the next thing I'm looking for is where is my exit, right? So as a good trader, you should be very, very precise. You should know where you want to get in and where you want to get out. The take profit is not even that important, because you can take a 1 to 1 million, 1 to 100, whatever. But I prefer to take a 1 to 2 on my trades, and I'm fine with that, guys. So this is my stop loss. So what you want to do now is double click on this position size tool. Okay, in case you're wondering how did I find this, you can see where my cursor went to. Pick this long position size tool, and if you're looking for a buy, then you want to use this long position size. But if you're looking for a sell, then you want to use this short position size. So once you get that, you just add that to your chart like this, and so this is for a buy, which is why I use the long. So let me just say my take profit is a 1 to 2 up here. Yeah, so what you want to do now is, let's say we want to take this trade on our MT5. So you double click on this long tool, this long position size tool, and you can see this is your stop loss. This is your stop loss here. This is your take profit number here, and this is your entry number here. So let's say you want to go to MT5. I like to use pending order when I take my trades, and let's say I use a buy limit. Let me say I use pending order, buy limit, which is a buy. Long means buy, short means sell. So I want to use long, which is buy. So you want to come to this TradingView again, copy this entry and come to this price, paste it. Oh man. Okay, now I was using Euro USD, so let me quickly switch. All right, so pending order, buy limit. So this is the price on a buy at, and my stop loss, you copy this number, you put it into your stop loss, paste it, and take profit, this one, copy it, and also paste it in the take profit. So once you're done like doing all this, then you click on this place button. The market is actually closed now, so I can't take any trades. So once you click on this place button, it's automatically plays the trade for you. So when price gets to that price, you're gonna get triggered in automatically. So this is a very, very short forex trading for beginners video. I just want to give you guys a brief introduction on what forex trading is and how it works, and how to get things started, and how to get a basic understanding of forex trading. So in conclusion, forex trading is a complex and dynamic market that can offer great opportunities for profit and also losses. But also requires a great deal of knowledge and discipline. Discipline is everything: psychology, risk management, showing up early, coming to the chart, analyzing. Even when you lose a trade, coming back to the market takes a lot of discipline. Having a strategy and practicing risk management, you can improve your chances of success as a trader. Remember to always do your own research and never invest more than you can afford to lose. So guys, consistency is key in this game. Like I said, I only became profitable like on my 2 years and a half, almost 3 years. So if I had given up on the first month, on the first week, on the first year, on the second year, I wouldn't have been at this point where I am now. making some some money trading. So all it takes is discipline, showing up, coming back to the chart, analyzing, journaling, risk management, and all this good stuff, guys. I know this video might not get a lot of views because on my channel a lot of you guys like to watch videos on indicators and strategies and all that, 1 minute strategy, 5 minute strategies and all that. But I just want to make this video out for you guys that have been asking me that you want to you want to understand forex trading. You don't seem to understand what forex trading is. So this is just a very brief video on like forex trading. So guys, I made a post on my YouTube account, on my YouTube channel, and I got a comments from one of my lovely fans, one of my lovely audience, and he dropped a question. So let me quickly show you guys that question and shout him out like I promised. So I said I want to make a video on forex trading for beginners, so drop all your comments, your questions, and I will include them in the video. Plus I also give you a shout out. So I got this wonderful person that replied. He said, what makes you confident about your trading strategy? So one thing I will say that makes me confident about my trading strategy, and I gave him a reply. Let me show you guys my reply. So I have been trading with my strategy for the past 1 year and 6 months, and I've been able to get funded with my first fund using this strategy. So I am very confident in this strategy, due to proper, like I've been doing I did a lot of testing and journaling and live trading with my with my strategy. So I pretty much have a lot of experience with this strategy. So I know that okay, even if I take like 2 losses in a row, 3 losses in a row, I know that okay, in the long run this strategy is very profitable. Right? So I wouldn't stop using it because of I lost 3 trades in a row, which happens. It's forex trading, so you can't get every trade right. Sometimes I could be in a drawdown, but I will still wake up the next day, get into the market, trade, and I will still expect to win or even lose. So it happens. So one thing I'll say is Ivan Newman, that's his name. So I don't know if he's a guy or a girl, but if you want to be confident in the way you trade, then you can go back test at least I'll say 40 trade, like 40 data, like 40 trade back tested. So when you back test like 40 times, like if you see this trade play out 40 times, get the data, it's worth a lot. Like it's a lot of data. So you shouldn't wait till you back test like 1,000 data. It's not important. As simple as little as 20, 30, 40, 50, maximum 50 can is, to me, is considered a good back testing. So all you have to do is start small, start using small risk size, and get comfortable with that strategy. So once you're comfortable with it and you have more confidence with using the strategy, then you can go full, you can go all in with the strategy. So I have just 2 strategies I use every single day. I go all in with. If I lose, I win, whatever.